The Federal Reserve is poised to make a significant move, and it's all because of the job market's recent struggles. But is this the right call? The Fed's dilemma. Federal Reserve Chair Jerome Powell and his team are anticipated to lower the benchmark interest rate by 0.25% on Wednesday, aiming to stimulate a job market that's showing signs of fatigue. This decision comes after a period of rate stability aimed at controlling persistent inflation. Inflation versus unemployment. While inflation remains a concern, with prices rising faster than the Fed's comfort zone, policymakers are now prioritizing the prevention of a sharp rise in unemployment. This shift in focus is a delicate balance. Corporate cuts and government shutdown. In recent days, major companies like Amazon and Target have announced substantial job cuts, with Amazon planning to reduce 14,000 corporate roles and Target trimming 1,000 jobs. The federal government's job cuts of around 100,000 in 8 months add to the concern. The government shutdown further complicates matters, delaying crucial economic data, including September's job report, and casting doubt on the availability of October's job growth figures. Inflation takes a backseat. A recent Labor Department report indicated milder inflation in September, reinforcing the Fed's decision to prioritize job growth concerns. Fed Governor Chris Waller emphasized the labor market's importance, suggesting that payroll gains have weakened and employment may already be in decline. Waller acknowledges the impact of President Trump's tariffs on prices, but doesn't foresee a lasting inflationary effect. Alternative data sources. With official government data limited, analysts are turning to alternative indicators. ADP's report showed a slight increase in private sector hiring, but its accuracy is often questioned. ADP's chief economist, Nila Richardson, warns that the improvement is modest and may not last. Spending and the job market. A healthy job market has been the backbone of consumer resilience. Richardson notes that while the labor market is not booming, it has provided enough strength to maintain steady consumer spending. However, a weakening job market could lead to reduced spending, impacting the broader economy. Uncertainty and mixed signals. The lack of official unemployment data for September and October adds to the uncertainty. Fed officials, like Waller, are relying on business contacts who provide conflicting reports. Some indicate labor market softening, while retailers report robust spending. This spending might be attributed to wealthy Americans, but a comprehensive understanding remains elusive until the government resumes data release. Controversial move? The Fed's decision to cut rates is a controversial one. Some argue it's necessary to support the job market, while others worry about the potential consequences for inflation. What do you think? Is the Fed making the right call, or should they focus on other economic indicators? Share your thoughts in the comments below.